Good day. This is your European Open briefing for Tuesday, July 19th. My name is Michael Florentiades. I am the Chief Economist here at XM.com, and these are the key points you should know today. The Kiwi dropped on lending restriction proposals from the RBNZ, maybe guiding towards a possible rate cut. The Aussie dropped on the RBA minutes, expressing some caution with respect to exchange rate strength. Yen shorts took some profits, so dollar yen, euro yen retreated a little, then came back up, of course. Oil was back to around $45 a barrel after a brief attempt to try to take over $46. And in terms of data, we have UK June inflation, German ZOO survey for July, and US building permits housing starts. On to the Aussie, it was down on the Reserve Bank of Australia minutes. The RBA was a little dovish on inflation, cautious on the exchange rate appreciation, so this led to some profit taking on the Aussie. Now, is this setting up for a quarter point cut on August 2nd? The market does seem to believe so, from 1.75 to 1.5%. It could be a new record low, I believe, for Australia. Interest rates, if they cut to 1.5%. Now, the technical picture for the Aussie is still positive, but it is approaching critical levels. With this latest dive, it has crossed below 75 cents and below the Tenkan Sen line. Now, on to the Kiwi. We had a drop there also, a severe drop, more than 1%. After the Reserve Bank of New Zealand proposed restrictions on property lending, a very hot housing market in New Zealand, it seems. Now, it's possible that stricter rules on mortgage lending could allow the bank to cut rates from the 2.25 level, but that remains to be seen. I mean, this is nice in theory, but we'll see whether that now that they did the mortgage lending rules, they are going to cut rates, or whether this signifies that the economy is going to slow down. So there are two ways of looking at this. Now, the Kiwi fell to a 3-week low versus the dollar. Generally, I would like to point out that the Kiwi and the Aussie had been doing well lately. There was growing risk appetite. Overall, the two economies were seen as far from Brexit, so the two currencies did well. Now, on to dollar yen, it faced some profit taking. It fell from the 106.3 level down to 105.6, but it has certainly rebounded to cross 106, above 106. Now, what the market is starting to focus on is the Bank of Japan meeting in late July, and there was a Reuters poll of analysts showing that 85% of them expect fresh measures. Now, this could be either a rate cut from minus 0.1 to minus 0.2, and perhaps more QE, maybe to a monthly 90 trillion from 80 trillion yen. Now, predictions about monetary easing in Japan make sense because extra stimulus would provide a 1-2 economic punch, so the monetary stimulus would act together with fiscal stimulus from the government, and we had news that Abe, following his election win, is going for extra fiscal stimulus, so that should definitely be a strong quote-unquote punch to the economy to get it to move forward, although we have seen these measures before. They would provide probably a short-term boost and not much more, but something to consider and something weighing on the yen. Back to crude oil, that was a significant move. It dropped back to around $45 a barrel. It tried to take on $46 maybe in the wake of the Turkish coup as well. We have API inventories today, and the Energy Information Agency administration tomorrow, the EIA crude inventories tomorrow. On to the calendar. UK inflation will be watched today, but it will not capture the post-Brexit mood. The German Zoo survey, the investor survey of Germany, is post-Brexit, so it is expected to show a sharp deterioration in sentiment and conditions. So that will be interesting to watch for the impact on the Europe's largest economy. And we also have building permits and housing starts out of the United States. They are expected to show a little improvement from the previous month. That's all from me today. Thank you very much for watching and have a great day.